Yes, sir, Ski. Yes, sir. What's up, y'all? Welcome back to another episode of the Wealth Talk. I'm Brother D Wall, co-creator of Think and Gem Wealth. I'm with the one and only Wolf with me. Feel me?
Yes, indeed. Yes, indeed. It's good to be back, man. To the little break. Happy New Year, my brother.
Happy New Year, my brother. Feel me? We going back to the basics, man. Today we gonna go over everything on how to actually save in 2026, how to actually set up a proper system to make it automated for you so you ain't gotta worry about it or think about it. And we gonna talk about what Trump doing with the mortgage system and with buying mad mortgage-backed securities. He's doing a lot. So we're gonna break that all down to figure out how that affects you as the consumer.
For sure. For sure, my brother. I mean, it's definitely been a lot going on, so we definitely want to make sure that we get y'all all the information that we can. And yeah, let's get into it, bro. So if you made some money in 2026 already, please throw a like in the chat because the year's just started. Good for you. We super excited, bro. And I guess the people just trying to figure out what we're gonna get into today, bro.
True, man. We gotta get into how to actually save some bread. You feel me? A lot of people try to save, but really don't have a plan behind it. They're just trying to save in whatever they have left over rather than making it a priority. You feel me? So today we're gonna
For
break
sure.
down how to not do that and how to properly invest and pay yourself first, set up a system to do that. And then also, we're going to talk about mortgage backed securities and how Trump potentially telling these government enterprises to buy up these securities, how that could affect you. You feel me? It's the wild, wild west out here. I didn't even know a president could do that, but I guess so. Shoot. So we're going to talk about it.
It's a lot of things I thought a president can do that this man been doing. So I just it's just
That's a
the motto for
fact.
the next 3 years.
Word. He got like 8 meme coins. The man got Tim's. Me and Wolf seen that the man was selling Tim's, sponsored Trump Tim's. I never
That blew
seen
my
this in my
mind.
life, y'all.
Can't make this shit up, yo. It's like we live in a movie.
Facts, man. This is gonna be a great
Nah, for real.
documentary on Netflix.
Yo, it really is, bro. That's wild. Nah, for sure,
Facts.
brother. And y'all know before we get into anything, we gotta give you out a disclaimer. So this podcast is for educational and entertainment purposes only. We are not your financial advisors, just your financial cousins. Always do your own research or talk to a professional before making any money moves, family. All right. All right. And outside of that, we gotta give y'all our money mindset moment. A simple. Money grows when it has a mission. All right, family. I'm gonna say that one more time for y'all. Money grows when it has a mission. Simple as that, family. And we're gonna talk about all of that related to y'all. So let's get straight into it, family. So why do most people fail at savings? That's just
Mm,
one thing that we gotta talk about today. Just most people do have trouble when it comes to saving money. We already know the economy is tough right now. Inflation is out of the roof. Insurance is going up. Groceries is going up. The things that you want to buy just to have fun is going up. Traveling is going up. So it's tough to save more money when everything else is going up. And what happens is people try to save what's left instead of saving first. You know what I'm saying? To break that down a little bit, if that went over anybody's head. When I get paid, so let's say I get paid at the beginning of the month. Instead of me saving at the beginning of the month, you're trying to save at the end of the month. When you already done went through a whole month of spending and trying to save and paying off debt, it's kind of like where it's kind of like where the situation happens. Instead of saving at the beginning, you're trying to save at the end. You need to reverse that. Now, life always eats what's left over. Life be lifing. We know that. So
facts.
it's tough to go against that. You can't. It's just when life happens, you got to just kind of go with it and be prepared. So we're going to introduce paying yourself first. Now it's simple. It may not sound like a lot, but $25 a week can make a big difference. That's $1,300 a year. Just starting off, $25 a week. Now, if you go out to eat every single day or every week, that's $25. If you did some food before you go to work every single day, that's $25. If you're a smoker, you're spending at least $25 a week. If you're a drinker, you're spending at least $25 a week. I'm just saying real life stuff, y'all. I'm not trying to put nobody in the
You gonna
spot,
get
none
some
of that,
people
but just think
mad.
about that, you know?
You gonna get
So,
some people mad, bro. I ain't gonna lie.
and that's why we're here, family. We gotta talk facts. We have to talk
Mm-hmm.
facts. A lot of people are gonna say, yo, I don't got $25. So let's analyze what you spend money on every day then. Do you smoke?
Facts.
Do you drink? Do you go out to eat? Do you not buy groceries every month and enough groceries? Nope. You rather just chill out. You don't really cook as much. Those are a lot of things that you could change up to help you save more money. All right. Now, with that being said, automation is always going to beat motivation. What does that mean? Now, let's say if I automate my savings, every single paycheck I got $25 going out, or in my bank account, I could automate $25 going out of my checkings into my savings every single week. That's going to be worth more than me just being motivated to do better. Motivation runs out eventually. It's 2026.
Mhm.
Everybody's out. New year, new me. You may be motivated, but let's say something happens and you lose all motivation. You get lazy for a couple of months. Now, what happens to your savings? You went from almost making $1,300 a year in savings to now you only saving 1,400. I mean, you only saving 500. You know what I'm saying? So it's tough to always go based off your motivation when humans have flaws. So you gotta automate it, because that way you don't have to worry about it anymore.
Set and forget.
Set and forget, family. Now, saving without a structure is like hooping with no rim. How you gonna score? Like,
It's
it
mad.
just
Pump fakes. Square, square, square.
yo, stress.
Square, square.
Yo, I
Oh
can't. It's
shit.
facts though. It's
Mm-hmm.
facts, family. So, one thing we always talked about was our little saving system. And it's not ours, but it's what we talked about last, the 50-30-20 rule, right?
Facts.
Now you can break this down. 50% is towards your needs, which is we'll tie that in with your emergency fund. 30% towards your short-term goals, vacation, new car, etc. And then the 20% is towards your wealth bucket, which is investing, buying stocks, ETFs, bonds, cryptos, high yield savings accounts. Those are the things that you want to break it down to, so that way you know exactly where your money is going to and what buckets you need to touch when certain things happen in life. Now, these things
That's a
support new tires, moving, having a baby. This stuff is super important, family. When it comes up, you want to make sure that you have all your money in the proper places so that way you can handle those certain situations or opportunities.
that's a saving system is you got to make sure you're not having a thing called lifestyle inflation, where you're making more money, so now you're spending more money. More is going towards the expenses that don't, bring you anything or your family anything beneficial in the future. So it's really just about sticking towards that budget and making sure that the 50-30-20 rule is always the same for you, no matter how much. If you're making $10,000 a year or you're making $1 million a year, it's still gonna be in your low, still gonna be the same rules, just different numbers.
Sure. It's a fact, bro. It's a fact. And there may be people out there that's like, yo, I could save way more than $25 a week. I could put up $100 a week. All right, bet. So if that's the case, we got a 52-week challenge for you, right? It's about
Facts.
51 50-week challenge now. And that's, let's say you just save $5 a day. Starting off, you can always go higher. That's $18.25 a year. We could do $10 a day. That's $3,650 a year. Come on
It's
now.
crazy.
You could put that money up.
Wow.
It's crazy. And if you could save up $100 a week, $10 a day, that's good money, fam. That's great money, at least for the year. And at the end of the year, it feels great to have. And let's say if something does happen within the year and you need to touch other money, you have that there. You know what I'm saying? So it's important to do that. And y'all need to know, like, how does your bank work? So with like Navy Federal, SoFi, a lot of these banks have the technology now where you can just automate it. You know what I'm saying? I'm not sure how y'all get paid, but look at whatever app you may use to get paid. It's also another way you can automate it. You can split up where your money goes to. You can have money, you can have 5%, or you can have dollar amounts going to certain areas of your bank or different types of banks. So like really get familiar with how your banks work and how your payment systems work with your job or your employer, however it is that you get paid.
Fact, bro. And honestly,
Now,
there are also some banks out
yeah.
there. Yeah, I'll say there's some banks out there that allow you to automate your investing even. So like you can actually have a piece of your paycheck automatically go towards obviously your retirement accounts, but let's say you have an account with Robert, you could automate your account to automatically have a piece of your paycheck go towards your buying power. So you can automate that too, to set and forget.
Exactly, bro. It's so important. Automation is gonna change the damn thing. Real talk. If you're not a tech person, learn tech because we're not going backwards. We're only going forward. AI is a big deal right now, family, and it's real. So if you don't know how to use the app and use your bank and go through different websites, learn it now because it's not going backwards. Yeah, and Now, the other thing is too is like life is life. So you need to learn how to save while in real life, whether that's you having debt, bills, different types of stress levels happening. You need to learn how to save while you're also in debt or while you're also going through those things. So if you want to take a step backwards, instead of saving that 3 to 6 month emergency fund, start with, $500 to $1,000 for that emergency fund. Let's start small, you know what I'm saying? And that way it's not too stressful because you're like, yo, I'm trying to get to 3 to 6 months, but it's different stuff keep happening. Start small, build up those goals. And when it comes to those certain goals, you actually want to put an identity on your goals. So for example, 2,000 by June, that's what I'll name one savings goal. 5,000 freedom fund, $100 a week until 10,000. Name your goals so that way when you're saving for those goals, like, yo, I'm not just saving to save. I'm saving to get to 10,000. I'm saving to put that down payment on a home. I'm saving to go on that trip to Dubai by 2027. Like, put an identity on it so it has meaning behind it. You know what I'm saying? You're not broke. You're just building, fam.
That's a fact. You're not broke, you just building. Word.
Know what I'm saying? And it gets simple as that, family. It's not something that we got to talk an hour about. It's just something that you got to start. You have to do it now. It may feel a little bit degrading sometimes when you first start off with such small goals, but once you get through those first 6 months, 3 months, and you start to see the progress of it, that's when it feels rewarding. So the beginning stage of it is not going to feel the best because you're like, yo, I'm only saving $25 a week. I'm only saving $10 a week. It's not really doing nothing for me. Give it some time. Let time do its job. And you'll be able to see, you'll be able to see the benefits of you setting those goals and you staying disciplined and, taking those chances on yourself.
Fact, bro. And honestly, I feel like one of the biggest things to help you do that is through community, bro. And that's why, both and now we offer our own type of Discord through For Thinking Gen Wealth, where we teach you everything, including this budgeted stuff about finances to all of our peoples. Our main thing is investing. And of course, we always going to prioritize that because that's an infinite money glitch. You feel me? But the biggest thing that we emphasize in our Discord with the one-on-one interactions with our people is get your budget in order so that way you can consistently invest rather than just having to be able to put
Exactly.
maybe $30 or $40 here. You could do it consistently every month because that's where real wealth is built. So if y'all want help doing that, that's
Exactly.
what we here for. That's what we got the Discord for.
For sure, my brother, for sure. Yeah, family. So that's definitely what we have for the savings part for 2026. I hope y'all able to save as much money as y'all can this year and really win the year. Hopefully by 2027 we can hear that everybody stacked up, a good 10,000 or more. You know what I'm saying? I'm gonna speak
Hmm.
that to existence for y'all. Yeah, fam. So I know you had some stuff about this Fannie Mae and Freddie Mac news, bro. Talk to me, bro. What's going on?
Yeah, bro. So, all right, boom, right, y'all. So recently, Trump had announced, well, first of all, Trump has been on a tirade now because the biggest thing with his administration that us as U.S. citizens are telling him is, yo, this ain't affordable no more. Like, affordability is a big thing that they're trying to address, especially when it comes to the midterms coming up this year. So, one of Trump's new ways of addressing that, he stated that he's having Fannie Mae and Freddie Mac, which, if you don't know, are government sponsored enterprises, specifically when it comes to mortgages and handling the housing market. He told them to buy $200 billion worth of mortgage backed securities. Now,
Mm.
that sounds like a bunch of words, so I'm going to break it down for me. For mortgage backed securities, essentially what they are is, let's say I boom, me and Wolf, we go out, we go buy two houses, right? Individually. So I buy one, he buy one. Now we go through the bank to do that. You feel me? So we find a lender, we get a mortgage for our properties. Boom, we paying a mortgage per month. We got our cribs, right? Now the lender, the bank, they don't want to sit on that mortgage the whole time. You feel me? They want to get it off their book somehow. So what these lenders do is they put a bunch of mortgages. They put me, Mike, they put Susie down the block, Sarah up the street, Bobby down the road, and they put together all of our mortgages and he sell them to the investors. You feel me? Investors being like pension funds, hedge funds, this, that, and the third, right? And those are mortgage-backed securities. It's a pool of mortgages sold to investors, and those investors receive essentially a percentage per month. Either it be six, not per month, per year. Either it be 6%, 5% off of the yields from those mortgages. So what Trump is saying, he's telling Fannie Mae and Freddie Mac to go buy $200 billion of that off of these lenders. Now, the reason he wants to do this is because his goal is to lower the cost of capital when it comes to mortgages, essentially interest rates with mortgages. Because to break it down in simple terms, how these mortgage rates are is they base off of the bond market plus a spread. All right, so I'm gonna break that down too. The bond market is there's multiple bonds. You got 30-year bond, 10-year bond, you got treasury bills, T-bills, this, that, and a third. But we're gonna focus solely on the 10-year mortgage bond. Now, 10-year treasury bond, excuse me, right? So the 10-year is essentially the floor for mortgage rates. You feel what I'm saying? Whatever the 10-year historically is where mortgage rates are going to be, right? Now, the spread that I mentioned earlier is how much us as investors are asking for in return for buying any type of mortgage-backed security. You feel me? Because us as investors, we look at any type of security like that, a mortgage-backed security, and we want to make sure we're getting the best type of price for us for how much risk we're taking on. So that's what the spread is. And the spread is crazy. The spread is like 3% because there's not a lot of liquidity within the mortgage market. Because back in the day, when it was 08 to like 2022, the feds, yo, they was buying every damn day. Every mortgage-backed security they could find, they was buying. And that made it a really safe investment for investors because they knew there was always going to be a buyer. But now we haven't done that. We've been quantitative tightening, which means making money more expensive since what, 2022? So that liquidity is gone. You feel me? And that makes the spread larger because investors are saying, yo, there's not a lot of liquidity. I want more money for the risk I'm putting on. Me? Now, we got the 10-year and the spread. That comes together, you got mortgage rates. So what Trump is trying to do is saying, I bet to lower the spread, I'm going to have these two put $200 billion in the market to make it more liquid. So that way it lowers the spread, which inevitably lowers mortgage rates. So now more people can afford to get financing for their homes. Now, is that a good thing or a bad thing? And how does that affect the consumer, right? In my eyes, I'm going to keep it a buck. I don't even care about politics tonight, right? I'm going to keep it a buck. It's not a good thing or a bad thing. It doesn't really make sense long term. That's how I'm coming down to it. Because if you're buying all these mortgage-backed securities, yeah, it's going to lower rates temporarily, but we also have to think of the bond market. In the bond market, those investors who buy your bonds, they're looking at the overall economy of the U.S. and how that's looking. And they make their purchases or they're selling based off of the data from the U.S. economy. If those investors seeing that, damn, Trump just essentially forced $200 billion into the housing market artificially, they're going to say, damn, that's inflationary. And they could have a point because, you know, with lower mortgage rates, more people are going to shop for homes. That means more bidding wars for homes. And there's already not a lot of supply of homes. So now there's going to be more bidding, more arguing. The prices could go up from that. So if investors are thinking, damn, this could be inflationary, that could cause the 10-year treasury yield to increase, which could then increase interest rates, which is the exact opposite of what you're trying to do. So
Right.
and this is the important things we have to understand, y'all, because a lot of people see these headlines and just think, oh, bet, cheaper mortgages. But no, we gotta understand the context and the impact over a long period of time. You feel me? But in the short term, as consumers, we definitely should expect to see a little bit lower mortgage rates. So if you win a house or whatever you want to refinance, you may have the opportunity to do that. Or if you're looking for a home, you'll be able to get some cheaper financing for it. But long term, if we're thinking about our bond market, which is essentially the big OG of the stock market, for me, it could look even scarier. It could look even scarier because if investors see that this could be inflationary, it could cause an increase in the bond market, which could lead to higher interest rates. But what I will say, it's a lot, bro. But what I will say is if you are owning stocks, either be any type of stocks, ETFs, Microsoft, whatever, this is good for you because the stock market loves free money. And essentially, Trump just told Fannie Mae and Freddie Mac to give out free money. And we love that because when there's more money in any type of market, there's more opportunity for investment in the stocks that we have. You feel me? So long story short, it's not a good thing. It's not a bad thing. I just think it don't make sense because it will help something short term, but long term, I don't see the point. But we also got to think politically. We got
Mm.
midterms coming up. The big thing is affordability. So you maybe try and make a point on that. But if you want to capitalize on this and you want a home, definitely look out for refinancing opportunities. If you're looking to buy a home, but you're budgeting appropriately for it, definitely look into the right lenders who know their stuff about things like this, so that way they can get you the best rate. And if you aren't buying stocks, you aren't dollar cost averaging, I wouldn't start now. I'm not saying to start because it's pretty expensive right now, but hey, talk to the right people like Wolf and I or Discord and we can get you sturdies. Hey, they printing money, so why not?
Yeah, real talk. I mean, we saw this before during COVID when they put money into the market. What happened? So there was a lot of people that ate
Mhm.
off it, a lot of people that made a lot of money. But we also did feel the long-term effects of it as well. And we're still feeling it right now. So I definitely do see what you're saying about, the good and the bad of it. That's crazy, bro. Did they give like any timelines on when he expecting to hear back from it, or can they just do it, or does it
Hell
have to go
no,
through
they probably just
approval?
doing it. Not that's the thing. I don't even think.
Mm,
I think they're just doing it because what Trump's really trying to do, he's trying to be the Feds, even though he's not the Feds. Because remember, you got fiscal policy and monetary policy.
mhm,
Fiscal policy is with the president and them saying like, little policies, the tax bill, things like that. A monetary policy is the Feds. They control buying bonds and all that. Since the Feds are
mhm,
quantitative easing right now, but since they are doing it the way Trump likes, he's trying to force it by having the people he does control be able to do that. But as far as the timeline, shoot, it could be right now, it could
yeah,
be tomorrow, it could be, you know what I'm saying? But it's in order to keep an eye on it,
yeah,
the best thing that our viewers can do, that all y'all can do, is take a look on things like mortgagenewsdaily.com. Those track interest rates literally 24/7. So you could watch mortgage rates on your phone, or you could actually look at the bond market. You could go to the 10-year treasury, just Google that, look how the bond yields look, and that could also dictate how your interest rates are going to look for your mortgages.
Hey, you just dropping, bro. Yeah, that's some big news right there. There's probably a lot of people out there that wants to get into a home and has been feeling a little bit down about it because everything is super expensive. This could be an opportunity, fam. It's definitely to be a good
That's a
opportunity.
fact. That's a fact, y'all.
Love
And
that.
don't get
Love
used
that,
to this.
bro.
Remember, y'all, this ain't normal. You feel me? So if the opportunity is good for you. You in a position. Looking to take an opportunity for sure.
I'm gonna have to go look at some houses again, see what's going on. Yeah, as soon as I get off
Nah,
of this.
man. Nah, man. This is just a sign for all of us, man. You have to invest now. You know what I'm saying? Because inflation isn't gonna go anywhere. None of this is gonna go anywhere. You know what? No matter who your president is, so you have to
Yep.
invest. You don't have a choice. You have to. Either it's in real estate, like we talking about, or it's in the stock market, which is our primary focus. But you have to do something because this inflationary stuff is not going anywhere anytime soon.
The one thing that always gets me when I hear people say, "Yeah, Imma just wait for prices to go down," and I'm like, "Bro, you can keep waiting all you want, but, home prices has never just straight gone down. It's always been on a slow increase up. A
Facts.
home 20 years ago is now worth way
Hmm.
more."
Facts.
So,
Even during the recessionary
yeah,
periods,
man.
you might see them little.
What you saying?
I would say you might see them little like little dips here and there, like in '08. But just like the stock market, those things always recover. You feel me? So take the opportunities, man. Just take the opportunities, but be responsible with them. Don't be putting up your second kidney. Not your second kidney. I'm fried. Don't be putting up your left rib cage to go live in the Futurama house. You feel me? Like make sure you budget it appropriately. Like Wolf and I was saying,
Yo.
you gonna budget your 50, 30, 20. Feel me? Don't be going out here to just look good to Susie and Derek. Make sure you have money to invest if you go into the house. Because yes, a house is a decent investment. It's a hedge against inflation, but the stock market beats it all the time. You can literally see that since the beginning of time. So make sure you have money to invest, even
Yep.
if you are going into a house. That cannot be your only investment. That's how you end up broke and stuck in a house.
It's facts. It's facts. And my brother, well, definitely appreciate you dropping them gems, man. Hey, family, 2026 isn't about making more money. It's just about controlling the money you already touch. All right. We know policies change, markets move, presidents come and go. We got 3 more years with this crazy guy. You know what I'm saying? But milk it as much as you can. It's still opportunities, no matter how y'all feel about the dude. It's still gonna be opportunities. So make sure y'all take advantage of it. Don't just be sitting back, crying, posting about how mad you are about something you can't control. Control what you can control and take advantage of every single opportunity, all right? Now, one thing I always want to say too is just build up your buckets. All right. Whatever that is, whether it's your investing, savings, you're investing, build everything up as much as you can, automate your future, and make this the year your money finally starts working for you, family. I'm tired of working for money. I'm tired of feeling
Mm.
like I'm a slave. I hate that word, but I'm tired of feeling like it. That's how money makes you feel when it's not working for you. So let's reverse the system. Let's reverse the psychology. Let's do stuff a little bit different this year, family.
Get to it, y'all.
Fam, Mr. Wolf, brother DY, we out of here, fam. Peace.
Yes, sir.